Hello and welcome to Market Today. I am Siddharth Zarabi and joining me now is Tarun Garg, the Chief Operating Officer and whole-time Director of Hyundai Motor India, a company that has begun what could well be India's largest public issue so far. Tarun, welcome to the show.
Thank you.
I want to begin by asking you to respond to that one big question in terms of growth, where a lot of people are saying that all the money is going to the promoter who has invested for many decades in developing the Indian business. So what happens to the company and its plans for growth across verticals? Begin by taking our viewers through your response on that particular point, Tarun.
Siddharth, thank you for having me here. Absolutely, we are on track for growth. If you talk about investments, we have already pledged 32,000 crores towards our expansion in the Pune plant, Maharashtra. Of course, including Tamil Nadu, 26,000 crore in Tamil Nadu, whether it is the EV charging infrastructure, refurbishment of the plant, of course, the new models launches over the next 8 to 10 years. So far we have invested 30,000 crore in India and further 32,000 crores over the next 8 to 10 years. If you see our track record, we are generating enough cash to take care of our capex requirements. So absolutely everything is on track. If you see regarding growth, most important thing is what are the new things which we are doing. If you see in the EV space, we are coming out with a very aggressive plan with 4 EVs coming up, starting with the Creta EV, which is going to come absolutely in the next quarter itself, Creta being a very strong brand. And not only that, we are covering it up by localizing as we speak, Siddharth. The battery packs are being localized. We have already announced a collaboration with a local Indian partner for the LFP cell manufacturing. We are looking at drivetrain, power electronics as well. So the entire EV ecosystem is being localized. We are looking at charging infrastructure development. So you can see that a lot of new initiatives are being taken, both in terms of capex, in terms of adding new segments. Yes, we are on a path to growth trajectory. And I believe this IPO will give an opportunity to both the local investors as well as international global investors to be a part of this growth story.
Tarun, I've many years ago as a reporter covered the company when BVR Subbu used to be there, and I recall the Santro, which was really at that point of time the most popular car model that India had seen. From then to now, why time the IPO now? Is it because markets are doing well and the promoter wanted to cash out? I'm just trying to understand the need for such a large float at a time in our market history as is currently panning out.
So if you see, India, of course, is now the 5th biggest economy in the world, exciting auto market. Hyundai has been now in India for 26 plus years. We have developed as the 2nd biggest auto OEM in the passenger vehicle space. We have grown a long way since the Santro was introduced. If you see today, SUVs are contributing 68% to our sales. We have many marquee brands, including the Creta, the Venue, the Exter, the i10, the i20. So our domestic and export, big focus area. Now the new plant in Pune is coming up, which will add up 250,000 to our current capacity of 824,000, which will basically take it to close to 1.1 million vehicles. So you can see, I think I can say that this is probably the 2nd phase of Hyundai's growth story in India. And I believe this is absolutely the right time to really further Indianize operations. And of course, our aim is to become the most trusted brand in India and also pursue global standards, whether it is in terms of operations, excellence, and of course, in terms of governance as well.
Well, since I went so back into the past, I need to look at the future with you, Tarun, and this is the EV segment, and you touched upon that. The global story of EVs and the current Indian market, where the market leader has, we well know, a portfolio of electric offerings. How do you plan to make a serious dent in this space? Because entry level cars, sedans and even SUVs that you are into are a different ball game from the EV space, and for the value conscious Indian consumer, some parts or some segments of EV buyers still remain sensitive to the upfront cost, for example, or the charging issues or the range anxiety. Give us your vision as far as the EV space is concerned, Tarun.
So, if you see, Siddharth, India is at the early stage of electrification. Currently, the penetration is about 2.5%, but backed by a very strong government focus and incentives, we believe that this segment is going to accelerate fast. And if you see Hyundai, we are looking at it very, very comprehensively. Of course, the launch of Kona and Ioniq 5 has given us a very good foray into the customer. Who is the customer, what are his preferences. There's a strong image in the mind of the customer as well. Now we are looking at not only introducing some great products. Creta, as you know, is a very strong brand. We believe the starting with the Creta, we are entering the high volume segment in the EV space. We are backing it up with a very strong localization. So as we speak now, Siddharth, the battery packs are being localized in Tamil Nadu. We are looking at LFP cell manufacturing with a local Indian partner, and also the drivetrain and power electronics. So the entire EV supply chain ecosystem is being localized so that it will help us to really position our EVs well. You talked about charging infrastructure. Even that is a big focus area. It's a three-pronged approach. If we see Hyundai, we are focusing big way on the fast chargers. So one, of course, we have a tie-up with the charge zone where 100 fast chargers are being made at our dealerships. Then with the Tamil Nadu government, there's a MOU for 100 fast charging states in the state of Tamil Nadu. Then our study suggested that while 85% of the customers charge at home or office, however, they were reluctant to take their EVs on highways. So that has been become a big focus area on some prominent locations and on some national highways. We now have 15 DC charging stations. We are going to pursue that as well. Then we have a very strong charging management system which gives access to our customers to around 8,000 charging stations in India. So that is the next strategy. You have seen the PM e-drive scheme, which talks about huge focus on the charging infrastructure. Then you see so many private operators, whether it is Charge Zone, whether it is Static, whether it is Adani, Tata Power, they have all announced very aggressive plans. So we believe that it's going to be a comprehensive approach to electrification in India, which will really lead to a fast acceleration. And Hyundai should play a very leading role in terms of this electrification. So probably this is going to be a very big step for us to really help us to not only make a big mark in the EV segment, but also look at improving our overall market share.
In 5 years' time from now, what do you expect from a value and volume perspective in terms of Hyundai's EV offerings, and what kind of market share are you looking to target?
So if you see, there are two things here. One is if you see the global markets, of course, whether it's US, whether it's Europe, whether it's China, of course, the EV penetration depends market to market. Somewhere it is 10 to 15%, say in US, maybe around 20% in Europe, maybe more than 35% in China. If you talk about India, like I said, we are currently at 2.5%. So there is a lot of upside to it. And we believe that market will, of course, grow. Whether it will reach 15% or 20% is anybody's guess. But most importantly, Hyundai should be able to target a market share in EVs higher than what we have in the IC space, because obviously all the manufacturers are really not focusing on the EV space. So that will open up more opportunities. And we believe that one, what I talked about, the ecosystem of supply chain as well as the charging, plus four models, which are going to play a very important role in increasing the volumes and also bring in economies of scale. So I think that should really help us to grow the EV space as far as Hyundai Motor India is concerned.
Tarun, you've seen the kind of retail participation in the Indian stock market. 5 years ago, if we were having this conversation, the story was very different. You've also seen the increasing amount of money that is coming in from SIPs, from pension funds that is going into the Indian market. The Indian market is now, the question that we debate there is how much of a Atmanirbhar stock market is it? To those retail investors who may be reading through the fine print and asking themselves this question, all the money is going to the promoter, what kind of outlook would you offer to them at this stage of medium term returns, dividend prospects from the Hyundai stock?
So look, what is most important is that you see the history, because this is a fact. So if you see our performance, whether it is the continuous growth which we have had over all these years, the consistent market share and the number two position which we have had, the history of really raising benchmark products in India, creating new benchmarks in every segment in which we have come. Plus, if you see the financial year 24 results, on a turnover of close to 70,000 crores, we had an EBITDA margin of 13.1%. We continued that great performance even in quarter one of financial 25. So that is what is the proposition, which we offer in terms of the growth, in terms of the expansion. Like I already said, after 15 years, a new plant in terms of a Pune plant is coming up, which will add 250,000 to our capacity, help us to really increase both our domestic and export volumes. The premiumization strategy continues. The SUVization continues. Last year, we had a SUV contribution of 60%. We have already reached 68% this year. In fact, in September, we reached 70%. We are continuously innovating. A couple of months back, we launched the dual cylinder CNG in Exter and Nios. We are receiving some great response. Last month, we launched the Alcazar facelift. We are receiving some great response. Creta continues to be a segment leader. So I think it is all about really balancing growth, volume, and market share, and the new capacity coming in is what the proposition is. I believe we are generating enough cash to really take care of our capex requirements, in the short to medium term. So absolutely, I would say that this is appears to be the second phase of Hyundai's growth story in India, and this is where we stand in terms of our proposition.
Tarun, by when can we expect the promoter to take a call on going down to 75% holding in line with the 25% float size? And is that decision going to be linked with any possible future fundraising requirements that may arise?
So as per the regulation, we are supposed to do it within 3 to 5 years. And this is what I can tell you at this stage, that yes, we will go for that balance minimum 7.5% between 3 to 5 years.
In the near term, immediate term, do you see any signs of stress? Because, over the last several months across, and I'm not talking about any particular category that your company serves in, we've seen a buildup of inventories in certain segments of the overall auto sector that was linked to, for example, rural distress or a slowing economy, high interest rates. In the immediate term, is that phase still continuing, or is the worst behind us from a broad industry perspective, Tarun?
So look, while I cannot predict the future, but I have spent more than 30 years in the auto industry, and I have seen enough of crest and pros. If you see CAGR, Siddharth, CAGR is at 5%, whether it's 5-year CAGR or 10% CAGR. However, we saw more than 20% growth in 22, then we saw close to 9% growth in 23. So some amount of moderation is very natural. That is point number one. Point number two is June, July, August, September, because of heat, rain, flood, etc., are always some sluggish months. October has started with a bang. This is after a long, long time that we have seen both the festivals of Navratri as well as Dhanteras in the same month. We are looking at the Vahan data until yesterday, same month over last month, 27% growth we are witnessing in the Vahan registrations, October till date versus September till date. So I believe we are, already seeing positive offshoots. So I don't think there is anything to worry. And like I said, we are fairly confident, and in fact very confident about the mid and long term growth prospects of the Indian auto industry.
Tarun, given the intense competition in our auto industry, and it's a remarkable one in this part of the world because of the levels of indigenization, because of the local capacity that foreign as well as domestic automakers have put up, and we have to thank policy decisions of 3-4 decades ago for that happening. But is there any segment, and I go back to an earlier answer to just expand on what you had said, is there any segment in terms of the overall product demands of the Indian market where you feel that your company will sort of refocus and double its efforts in the near future?
So if you see India, still the car penetration is around 30 per thousand, and obviously it's such a big country. So there will always be opportunities. Hyundai has always been ahead of the curve in identifying these opportunities. Last year we introduced Exter in the micro SUV segment. It has done
Yeah.
so well. I talked about electrification. We believe there is still so much of upside to what we can do in that space. And of course, there are more opportunities. I cannot talk about specific segments, but what I can say is our record in India suggests that we have always looked at those opportunities, and we have been able to really do it at the right time, right price, and also raising the benchmarks. And there is no reason to believe that we will, of course, we will, why we will not do it in the future. We will definitely continue to follow similar strategy in the future as well.
Tarun, at one hand, we have seen the increasing SUization of the market, and that is a word that I've tried to bring in to explain what is happening in terms of this preference of customers changing and auto companies responding. But at the top end of the actual real SUV market, the number of offerings seems to be limited. Your competitors have defining product, defining category defining products in that segment. On the off chance, can I get you to answer that question, that will Hyundai ever look at it, perhaps either do a made for India model to suit its requirement, or get it from somewhere else?
Look, while I cannot answer specifically on the model plan, but what I can always say is history speaks for itself. That we have seen, identified whatever the opportunities are there, and we have always believed in made for India. In fact, one thing which differentiates Hyundai from probably some of the other global players is that we have never believed in only bringing a product as it is global product and trying to sell it in India. We have believed in India centric products right from the time we launched the Santro or the i10 or the Accent or the Creta or the Venue or the Extra. I think this has been one key reason for our success, and we shall continue to do in the future as well. But it will be very difficult for me to tell you specifically that this is the segment we are looking for.
But not to ask you about your company plans, but a general quick comment about that. The large SUV segment, is that growing in India, or has that kind of plateaued?
Look, with a country like India, where the disposable income continues to go up, and of course, customer aspirations really going up, we are seeing really the customer, choice going up. In fact, just to share with you, even the ASP for us has continuously gone up, now reached 7,70,000 rupees. So first time buyer percentage has gone up from 32% 5 years back to 38%, despite the ASP going up. So very clearly, Siddharth, customer is moving up the chain, which throws up more and more opportunities in the future. You talked about a particular segment that, yes, it is definitely growing. Today, it is contributing close to, I'm talking about the Alcazar segment. It is already contributing about 7.5 to 8% to the overall industry. So obviously, there are opportunities everywhere. Like I mentioned, there were opportunities in the micro SUV space, which we captured. And we are looking at all these segments where there's an opportunity, and where probably we can look at, okay, what is it we can do about it. But specifically, like I said, I will not like to comment on any particular segment.
Over the past 4 years, Tarun, the PV market share seems to have fallen by almost 300 basis points, from 17.5 to around 14.5%. Is that something to stay? Is management comfortable with that level, or are you working towards clawing back and perhaps going above it?
Look, as a sales professional, I will never be satisfied with the current performance, whether it is volume or market share. So no way. And we always want to, improve volume, improve market share, improve profit. And important thing is, how do you really balance? If you talk about our market share, our volumes, if you see over the last 5 years, say 2018 to 2023, market share has probably gone down by 1% or so. At the same time, the ASP has gone up, the profit has gone up, the EBITDA margins have gone up, the volumes have gone up. In fact, over the past 26 years, we have one company which has consistently grown, improved margins, and also being number two, a very strong number two player. So I believe this kind of a holistic approach, a balanced approach, helps you to have a sustainable growth. And that is what we will pursue. The new capacities which are coming in will give us more headroom to really look at market share. And of course, we will do anything and everything possible to pursue the same strategy of market share, volume, and profit.
One final question before I let you go. To those prospective investors who may be listening in to this conversation, and they have overall 3 days to make up their mind, what would you tell them? Why should they bid, if at all?
So look, like I said, that we have been in India for 26 plus years. We have really identified market trends. Marquee brands have been launched. We have got so much of love and affection, and we have a very strong parentage. I think in these times of uncertainty, which is becoming a global norm. In terms of technology, we are really agnostic. We are offering different kind of technologies, whether it is petrol, CNG, EVs, diesel. We have access to all HMC technologies like hybrid, strong hybrid, plug-in hybrid, even hydrogen. So we believe that we are really rightly placed to take care of all the opportunities which come in. The capacity is coming in, exporting to 80 plus countries. So I think all this provides a good platform to us to continue our growth phase in India. So this is what is our proposition, and this is what we have mentioned in our RHP as well.
A colleague has asked me to definitely ask you that since it's such a gargantuan IPO and it's open for everyone, are you open as a company, given overall market dynamics, to offer some discounts also, if not to everyone, but at least investors who manage to pick up some shares in your issue?
So I'll pass that question.
Okay, well, we'll wait for how investors respond to that and many more questions. But Tarun, wish you all the very well for all your plans. Viewers, that was Tarun Garg talking to us about a behemoth of an IPO from a car maker who hopes that India's passion for wheels is going to mean and lead to a certain set of returns for its promoter, who from 100% owned company is now going down to 82.5%, and eventually will also have to meet the 25% minimum public norm. But we'll come to that later on. For now, it's a wrap on this conversation with Tarun Garg. We'll slip into a short break. We'll come back with more. Do stay tuned in with Business Today Television.